Well, happy Monday, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, the Labor Day edition. Hopefully, you're enjoying your Labor Day holiday. This week, and I teased it last week, where are the entry-level homes? It's a great question. We're going to talk about that in just a moment. But first, let's look at the latest stats. Right now, we have 2,857 homes for sale throughout San Diego County. It's an increase of just 11 from last week. Median list price just under 1.1 million, so a little bit of a drop from last week. Average days on market 47. That's up 1 day. Pending sales down 110, down to 2007 from last week. But interesting anomaly with that, which we'll talk about in just a moment. Median list price 829. That's higher than last week. Average days on market 23. No change. The months of inventory, slight increase to 1.44. So still under 1.5 months of inventory in San Diego County. Here's a chart that shows total actives and total pendings. You can see actives going up a little bit, pendings the lowest they've been in quite a while. But what's an interesting stat, and we'll talk about the pendings in just a second, but first the actives, new actives, 628. It's a drop of 32 from last week, kind of a hefty drop. Median list price down to 879, 495. New pendings up 30 to 365. So more pendings, more homes went into escrow last week than the week before, but overall pendings are down. Must translate into more closings. We'll see. So an increase of 30 from last week. Median list price 815. It's a drop from last week. Average days on market 15, 2 fewer days. New pendings listed within last week 21, and new pendings listed within the last 2 weeks 189. So over half the homes are still selling in 2 weeks or less. It was 47% last week. So it seems like homes are selling a little bit faster now than they had been. A little uptick. New closed sales up 86. So that's why we see a lot fewer homes in escrow now, even with an increase of the number of homes going into escrow last week. We had a lot of closings, 423 last week. Median list price 848, which is a drop from the week before. Median sales price 859, which is also a drop from last week. No change in the average days on market. We're at 20. The least expensive sale was in Mount Laguna for $189,000. I think the first time Mount Laguna ever showed up. Not the first time Rancho Santa Fe ever showed up for the most expensive sale, $16,750,000. So here's a chart shows new actives, new pendings, and new closed sales. And you can see the number of new actives hovering around the same, bouncing around from what we have seen over the last few weeks. Pendings, down a little bit over the last few weeks, but sales jumped up as well from last week. And then the pricing, a little bit dip from the last few weeks in the median list price and sales price. Homes are still selling for more than what they're being listed for. Okay, where are the entry-level homes? This showed up in the reports on housing a couple weeks ago. And you can see homes placed on the market from January 1 to July 31st. So these are several different years, that same period of time, first 7 months of the year. This year, 17,394 homes came on the market in the first 7 months of the year. Compare that to between 2017 and 2019, the average, 33,000. So 48% fewer homes came on the market this year through the end of July than they had been during the normal years, 2017 to 2019. Huge difference. But if you look at where those homes, where that drop off is coming from, it's the lower priced homes. Homes priced 0 to 500,000, down 85% this year versus those few years. Homes 500,000 to 750, down 60%, and then only a 3% drop in the 750 to a million. And then 10% more homes came on the market this year through the end of July in the 1 to 1.5 million category than they did in those years, and on from there. What's happening? Well, prices have jumped up so much that homes that might have been priced in the 500 to 750 are now in the 750 to 1 million. That's pushing the prices up, but nothing is coming in to replace it. We're not seeing homes coming on the market to replace those lower price homes. So what are people buying? Well, they're buying attached homes in order to get their first home in a lot of cases. But we're not seeing single family homes coming on the market in that price category because prices have jumped up so much. And so therefore, you can see in the county market breakdown in the price ranges of 0 to 750, a percent of current inventory is 27%, but the demand is 35%. So much more demand than supply in the 0 to 750. Much more demand in the 750 to a million category, 28% of the demand, but only 20% of the inventory. Even we have more demand than supply in the million to 1.25 million and the 1.25 to 1.5 million. More demand than supply in those categories. We only start seeing the shift in the above 1.5 million, where you see more demand, more supply than demand. So prices have just jumped up so much that we're seeing just not enough inventory lower. How is that going to change? Well, people are going to be buying, like I said, more attached homes. We have to see more inventory come on the market, if possible, in those lower price categories. If there are any that would come on that price point, prices may adjust. We'll have to wait and see. That's it for this week's Monday Market Moment, but some really interesting information I thought I would share. Don't forget to scan the QR code to track your home's value. Have a great Labor Day and a great start to your September. I look forward to seeing you next Monday. Have a great day.
You've been watching Monday Market Moment with Bryan Devore. Please subscribe to our channel so you never miss an update.